the next one that I wanted to talk about is like everyone knows the value of property. So like bricks and mortar, etc. The reason that is because back in the day, people used to believe in pensions, etc. And they used to put their money into pensions, and pensions was quite safe. And then a few people got robbed from their pension pots and found it hard to get the money back out at the other end. So they started investing into properties. They started buying the second house, etc., and all that, and putting money into there. And everyone knows bricks and mortar is a hard asset. It's not going anywhere. You can see it. You bought bricks and mortar. Is good. What I wanted to show is that not many people know the value of gold. So gold is a hard asset. Property is a hard asset as well. So it's not say I'm not doing this to say that one is better than the other. Property is better than gold, or property is better than gold, or vice versa. It's not about that. I don't like doing that with any comparisons, if you know what I'm saying, because I view things that everything's got its place. Bitcoin, I don't really like to compare that to gold in a negative way, because Bitcoin's got its place, just like gold has got its place. But some people don't like to do that. They have to batter one asset, if you know what I'm saying, to big up the other asset. Don't know why they do that. Why it's like, you know what I mean, like to have an open mind and to be open to more ideas is better than to be tunnel visioned into one thing, I think.
Oh, definitely.
So here comes the comparison of between two hard assets. So I was with my friend one time. We was working. He was doing a bit of labouring for me, and we was talking about gold and silver, etc., on our lunch break and that. And then we got to talk about property as well. And in 2005, he brought a 2-bedroom house in Watford for £183,000. So he probably put a deposit down there like what any normal person would have done. But the value of the property was £183,000. And I've seen this comparison done before on an Australian YouTube channel. They're gold bullion dealers, but they've done a similar sort of comparison to what I'm going to do now. So it got my mind thinking, and I thought, right, I've heard this Australian version in their dollars, and that, let me do an English version in the pounds and that, and see how things come out. So his 2-bedroom house was £183,000 in 2005. Now in 2005, you could buy 1 ounce of gold for around about £350. The spot price would have been about 250, but you always have to pay slightly above the spot price. When you come to selling it, usually you'll get spot price, which is lower than what the current physical value is. So I'll keep it simple. In 2005, the physical value is 350. The spot price is like the trade price is 250. So if you're going to buy it with your £183,000, you would be looking at the physical price, because you're buying physical, you're not going to be buying spot price. So you get roughly about 522 ounces of gold. For your £183,000. Now, can you imagine if you, like, I'm not that rich anyway, and a lot of people are not, so they wouldn't have £183,000 cash there. But still, like, if you did have quite a bit of money and you had enough to buy a house outright for £183,000, and at the same time you had more money left over, where you could afford to put £183,000 into gold, most people would think you were absolutely nuts to do that, wouldn't they?
Oh, definitely.
They'd be like, buy another house. I said, I don't want to do this as a complete comparison of saying one is better than the other, because they both got their uses, if you know what I'm saying. But so you get 522 ounces of gold for your £183,000. Now, moving forward to current times, that 2-bedroom house in North Watford is roughly worth about £420,000. So it's gone up. So that's why people invest into property, because it's a slow burner. Sometimes you can get big jumps in it, but you know you're not really going to lose too much over a longer period of time. It's going to go up in value, isn't it?
Right. Yeah.
Most people know that, don't they? So that's why they feel confident in one, you can live in a house. There's so many benefits to owning property, but also you know that it's going to go up in value. So that's £420,000 from your initial investment of £183,000. Now, have a little guess how much. I don't know even whether I should say this to you, because I know I spoke to you and I spoke to a few other people about this on some of our little group chats.
Yeah.
So, can you remember what I said?
No, but I remember it went up quite a bit though.
Yeah, but you can't remember the number.
No.
Yeah, so all right, and have a guess. 522 ounces, seeing that you forgot anyway. How much do you think it's worth today if you sold it at the spot price? Obviously, you're not going to get trade price for it, because the trade price is say 1,450 an ounce. You won't get that. You'll get the spot price, which is about 1,350. You may have to sell it a little bit less if you wanted to do a quick transaction.
Yeah.
But generally, you'd get about 1,350 spot price for it. So, right, so 522 ounces. How much do you reckon that's worth? Remember, the house was 420 grand.
House is 420
from your 180 grand.
And how much was the gold per ounce?
Per ounce? No, you'll work it out. So you might be good at maths. I won't give you that one. 522 ounces. How much do you reckon them 522 ounces are worth? Bear in mind, the house is now worth 420 grand. You started off with 183,000. The house is worth 420,000. How much is that gold worth now? You brought one. Imagine this: you brought one house. You brought 522 ounces of gold. Your house is worth 420,000. How much is your gold worth?
Around the same as the house.
If it was, you'd still be happy, wouldn't you?
Yeah, definitely.
Because you'd be thinking that's profit still. That's like what? 420,000. My maths is shit. Minus 1,000. That's still 237 grand.
Yeah.
Profit on your initial investment. So you're
I'm
still
going just a bit more than the house. Because I know you like gold, and obviously the nature of this video, I'm gonna say that it's just over the price of the house.
Yeah, you could be close to that, but no, it's £704,000.
Yeah.
Yep. So if we go 1,350 times 522 ounces that you brought, 704,000. It's a little bit over 704,000. See, as I said, most people would not know that at all. And then it'd be like, oh yeah, but that's not going to happen again in the future, if you know what I'm saying. As I said to you before, when you're invested in gold, don't look at it as a growth investment. Look at it as a savings pot first of all.
Yeah.
Because then you're not going to get disappointed about anything. If it stays, who knows what the future can hold? No one knows, do they? It may go like this, but it may go flat. It's never really going to go down too much. So you may not get that type of increasement over the next 15 odd years or whatever, but it will still go up, if you know what I'm saying. So that's 704,000 from your 183,000. So 704,000 minus 183. My maths is shit, obviously. I had it written down here, but I just wanted to double check. That's 521,000 profit. That's like half a million profit. And the beauty of it, no tax to pay. No tax to pay. And people say, oh yeah, but what about storing all that? So like if you stored it in a vault or whatever, you might have to minus your storage things if you had, and bear in mind, 522 ounces of gold is not a lot to hold.
No.
You could probably put it in your underpants.
Fuck. Wow. So either way, a little wall safe or something, and you're nice.
You could get away with that, yeah. Obviously, you wouldn't tell anyone where it is now.
Hell no, bro.
You could hide it quite. You could hide it quite easy. I think I've done another little comparison where I had the equivalent in size and weight of what a certain amount of gold would look, and it filled my hand. It was like nearly 100 grand, if you know what I'm saying.
Yeah.
In my hand. So.
Jeez. Okay.
So it's not as hard as what people think, if you know what I'm saying.
So bottom line, if you had invested that same money that you put into a house into gold, you would have ended up with more.
Imagine if you was rich and you was able to buy a house. This one I'm going to show a good comparisons. You're going to buy a house, right? You already got one house to live in. You're going to buy a house as an investment property, and you had enough money to buy the same equivalent amount of investment in gold as well. The benefits of a house would be that one, obviously someone else is paying off your mortgage, if you know what I'm saying. So the debt that you've got there, they're paying that off. So really, you could look at that as even you got that extra bit, because imagine you only put 50 grand into it. They're paying off your mortgage, so you're not putting any more of your own money out of your pocket into it, are you? You put 50 grand in it. And any profit that you're getting from the monthly payments is hopefully paying for any maintenance of the place or whatever. You may have to look into your pocket or whatever a bit over that period of time. But if you rented it out for all that time on a repayment mortgage, with that person who's living in your house has paid off your mortgage, the benefit of property is at that point it's cash flow. That's the difference. You don't get cash flow of gold. So
no passive
income.
No passive income you won't make off.
And that's why some people go, oh yeah, gold is shit, because you don't, you know what I mean, it just sits there, does nothing. You can't, it's got no dividend payout, it's got no cash flow from it. And they get blinded, don't they? They got the blinkers on and they only see one thing. Oh, I want dividends, I want cash flow, and they're looking for the cash flow and they're thinking everything's got to be cash flow. Everything hasn't got to be cash flow, but cash flow is obviously important, because if you had a property like that now and you're older, and where you say, for instance, getting maybe like £1.5 grand income from there, and it's paying off your mortgage and maintenance. So now later on, that same property, you could, obviously you don't have to pay off no mortgage, but you still got to do the maintenance and you still got to pay some tax or whatever. But still, at the end of that, that might still bring you in about £1 grand a month cash flow. So for a retirement thing, that's why people loved it for their pension, is because they got something that's still there that they can cash in at any time, plus is producing cash flow. So as I'm comparing gold to property, and gold has blatantly made more money than property in that comparison, I'm still showing the difference between the two. And I'm not bashing the property over the gold. I'm just showing what gold can do compared to property. You know what I'm saying? So I think a lot of people don't know the ins of this. And the reason why I know it is because I've educated myself via videos, YouTubes, etc. One of the, I think, as I said, Robert Kiyosaki was the first one. Then Mike Maloney, and this is Mike Maloney's book. This is
Baloney, you know.
Maloney, isn't it?
Maloney.
Yeah, Mike Maloney, isn't it? Did I say that right?
No, Maloney. But his name's Maloney.
I didn't say Maloney.
You did say Maloney.
That's my Watford accent, mate. That's my Watford accent. Don't believe anything. Right, when I say this back, if I said baloney, it wasn't baloney. That's my Watford accent. It's Mike Maloney. Right, so that's his book there. The Guide to Investing in Gold and Silver. So from that's how come I started learning other bits about the monetary system. One of the first books. So that's a good book to get if you're interested in this sort of thing.
Okay.
So Guide to Investing in Gold and Silver, Protect Your Financial Future by Michael Maloney. And it's not baloney. A lot of Americans like to say that word. One of the original books, which is a classic on the same type of subject, is The Richest Man in Babylon. You heard that one?
Yeah.
So this is a version of I think there's a couple of versions. This is the original version, restored and revised.
Okay.
And this is basically just old school teachings about money, about the monetary system, financial stuff, and that is just simple lessons that have been there for years, if you know what I'm saying. We're moving forward into this digital age where we want to complicate things too much, if you know what I'm saying, sometimes. And sometimes some of these old simple things from back in the day are still relevant today. If you know what I'm saying, some of the old lessons. If you know what I'm saying.
Yeah.